Jason, when we look back on the year, we're still averaging a Brent crude price of what, around $111, $112 for the year. So despite all the uncertainty and despite the fragility in the market, actually it hasn't been a bad year.
No, you've seen prices that have been pretty high all year, even though there have been sizable risks. What you've seen are a couple of main factors underlying the higher prices. One, of course, is the fact that you're seeing continued emerging market demand growth for transportation fuels especially. That's been critical. Of course, you've had Iranian oil off the market this year. That's provided upside to some of the pricing as well. And of course, the global economy has expanded, even if this year's growth was a deceleration from last year.
Now, throughout the year, I've been reading your reports, and you're always talking about the fact that you see, in inverted commas, modest growth that you are expecting in the American market. Is that what's coming true as we sort of end up the last few weeks of the year?
Yeah, that's right. I mean, this year was a year of modest growth. Global economy growing around 3%, U.S. economy a little above 2%. Not great, not bad. It's positive, moving in the right direction, modest. Next year, we're likely to see growth about the same, a little bit better on the global level. Again, modest growth continuing.
But looking at what's going on in America, I mean, the fiscal cliff, they're teetering on the brink, so to speak. I mean, I'm not going to ask you what can happen there. I mean, you can give me scenarios, I suppose, but you probably don't know what's going to happen. But they have to get this right, though. They have to come up with something.
Well, if they don't, the scenarios basically are, if they reach some kind of a compromise before the end of the year, I think oil prices, I think equities, industrial metals, these prices are going to go higher. Markets will be more confident. If they don't come to a deal before the end of the year, it pretty much guarantees a recession in the United States next year. And that would push oil prices sharply lower, equities lower, industrial metals lower. That's really the two things. My expectation is what we've seen in the past is what we will see again. A short-term, temporary, last-minute compromise that kicks the can down the road or buys us a little time to really fix some of these problems later on. It's not in the best interest of politicians to try to get an early compromise. They have to drag it out to the last second to convince their constituents that they fought as hard as they could.
Now, also the other issue, of course, in America, too, is we're seeing American oil come onto the market, I mean, at a rate we've never seen before, 6.5 million barrels a day, something like this. And also we're seeing OPEC raise this in its world oil demand outlook, and we see it's the IEA. I mean, it's high on the agenda now, where it's a reality. There's a lot of oil being produced in America. Will this be a game changer, or what might happen here?
Well, it's interesting. If you look at the 2012 World Oil Outlook that OPEC put together, it was recently published, you can see that North America is the one region that's adding a huge chunk of new oil supplies to the market. It was true last year, it's been true this year, it'll be true next year, and it'll be true for a number of years. So other regions in the world, they've added a little or they've lost a little, but it's really North America is where you're adding a lot of new supply. But the truth is, we're going to need that supply. If you look at emerging market demand, somewhere like the U.S., on a per capita basis, Americans consume twice as much oil as people in Europe. They consume about 4.5 times as much as people in Brazil per person, about 9 times as much per person as in China, and about 20 times more per person than in India. So emerging market demand is really low on a per capita basis. You're going to see that go up very significantly. You've seen it in China and India. The increases over the past couple of decades have been truly significant, and that's going to continue.
And a lot of that oil in America, though, where is it going? Is it feeding domestic demand? I mean, it's not really being exported outside the country, is it?
Well, it doesn't really matter at the end of the day where the North American oil goes, because it's a global market, and if North America doesn't need to import as much, that's what really happens is imports go down, and so the oil that would have gone into the United States ends up going somewhere else. It's a fungible commodity. And this is going to continue. This trend is going to continue, where the imports into North America are likely to decline over time.
Now, when we look back at the year, what would you say have been the highlights of 2012 when you look at the oil market?
I think when I think of the highlights, the big price movers, I think of course, the Iranian oil embargo that was implemented partially at the beginning of the year, and then in the middle of the year, the European Union fully implemented it. You can remember that really sharp run-up in price at the end of June. That was really important. I think throughout the year, you look at when the Fed implemented quantitative easing, 3-year quantitative easing infinity. That had a big, huge impact. And another big impact was also at the end of June when you saw the EU summit decision come out, where it was the announcement of the single supervisory mechanism. These things are really important because whenever whenever there's Fed events or there's an EU summit, these things have the ability to move significantly the market because it's really the key consumer end markets for the global economy, which are the Eurozone and the United States. When we think on an economic basis, those are the things that are really going to be driving things higher.
And when we look ahead to 2013, what would you say are the big challenges that OPEC's dealing with right now as we end this year and then looking ahead to next year?
You know, on a financial basis, if we think about what the biggest challenges for next year are, it's still, making sure Europe grows, the concern about European sovereign debt issues and growth issues. And I remember at the OPEC symposium back in June, this was really the hot topic. Everyone was talking about it, the Secretary General, a number of the ministers. There's that short-term risk about what's going on in the Eurozone, what's going on here with growth, and what does that mean for the short term? It's downside risk story in the short term, but in the medium and the long term, the emerging market stuff is going to be very positive. So just making sure that the global economy continues on even modest growth, on a positive trajectory in the short run. That's what's going to be really, really important. And of course, the United States, seeing that growth be positive, that's also going to be very important for the financial markets, very important for oil prices.
And of course, if we get that maybe beyond modest growth that everybody will be hoping for in America, I mean, that then has a knock-on effect really right throughout the world. I mean, would you say that America is still the sort of main instigator of, the global health of the world economy?
Well, in many ways it is. And the reason both the United States and the Eurozone are so critical is if we think of the world in terms of a global supply chain, they're the end consumers. And to put it in oil terms, they're the downstream. Places like China that manufactures and India that provides a lot of services, they're the midstream. And other countries like Brazil or Australia, these are the upstream. So they provide the raw materials that go into China that then comes out and is sold into the end market. If the United States and the Eurozone are quite slower, you can try to create endogenous growth in China, but it's not going to replace the significant demand from consumers in those big end markets. The health of those end markets is critical because that's where the consumers are globally, the highest consumers of crude and the highest consumers of goods in general.
So are you optimistic for the year ahead then?
I think it's going to be an okay year. What I've told my clients, it might be a Rip Van Winkle kind of year where if you went to sleep, if you slept through 2013, you might not miss much, but I don't think you'll wake up in the middle of the night screaming.